Okay, good morning, everyone. I'd like to welcome you all to the Daily Energy Markets podcast. It's November the 24th. Great to have with us Omar Najia, Victor Yang, and Laurie Haitian, three of our regular and very trustworthy analysts and commentators. Omar, let me start with you today, just a bit on sort of oil price movements, reacting last week a lot to sort of the Russia sanctions threat. Again, it was actually getting support oil apparently last week because, the US was going to be perhaps actually implementing more stringent sanctions. And now, of course, over the weekend, we have more headlines about, peace between Ukraine and Russia and oil reacting a little bit there. Perhaps, do you think, is the oil market paying attention to these headlines anymore? Russia, Ukraine in particular for the time being?
No, it is. I mean, the thing that's driving the oil market is distillate prices, so gas oil prices. And those have, they have a massive impact to do with Russia, sanctions, and the US imposing sanctions on anybody who trades with Russia, the EU sanctions, all that. So if there is a quote unquote peace agreement and, if you see like a hint that it's real, then I think distillate prices will definitely drop.
Okay.
And that means basically the oil market will drop. But having said that, the thing to understand is we are at the end of a correction from the highs we saw during the war or the start of the war at 130 WTI. Those lows are in place at $55. I don't think you see the market go below that, and I think going forwards, the market's going to rally in a big way over time, months, years, whatever it is, and take out those all-time highs. So I'm definitely not bearish. But the distillate market, that's something else. Cracks, the premium of distillates against crude, that's what's going to move.
Yeah, and I was going to actually get to that a bit later with you and ask you where that's going, because that has been quite a big divergence, hasn't it, recently in products really on the stronger side than crude. Laurie Haitian, MENA Director, Natural Resources Governance Institute, welcome. Great to have you. Laurie, also a lot of, unfortunately, activity over the weekend in other regions. We saw a hit on Lebanon. I mean, the south has been hit continuously by Israel the last few months, but actually a reported one in the southern suburbs of Beirut, which is always considered, closer to home, let's say. And again, a lot of whispers about, in the new year also, we're going to see the Iranian action ramped up again against Iran. I mean, what's your sense of where that's going, having had a relatively quiet 6 months, Lebanon, Iran, Israel?
So good morning to all. Definitely, I think whenever we talk about what Israel doing in the region, it's not per se like about Palestine or Lebanon, more about the reaction of Iran. And there were talks, there were some, I don't know, like analysis saying that next could be like another strike of Israel on Iran, because Israel is saying that Iran nonstop is rearming at least Hezbollah. We don't see any reactions from the Houthis yet, but like there is that potential that there might be a hit on Iran. And it seems that from what we are hearing, Iran is not going to not react. And then that means that if we don't yet if this Russia-Ukraine deal is going through, I think we are going to go through like negotiations between all parties, Ukrainians, Europeans, with the US, and after that we'll see what Russia will do. But at the same time, I think the risk is there might be some tensions with Iranians. And this is where I think, again, we will start like looking at Iran, what will happen with Iran, Israel. And this is where I guess the prices will be impacted a bit about like, is there an Iran attack or not? Prices go down, go up. So that's, I think, in parallel to what now will happen with the Russia-Ukraine deal. Well, we don't know, because basically if they will go through the deal or not. The direction is like, let's negotiate what is on the table, and that it doesn't say that we're going right or left or which direction, but like at least there is that like negotiations starting most probably now and through the first quarter of 2026, and Iran. And
Yeah, I
Venezuela,
mean,
of course.
and Venezuela, of course. I mean, you'd think Trump needs to, with his whole midterm focus from next year, he wants to be seen as at least trying to cement some peace plans all round. But I mean, I don't know what's Russia, Ukraine. I mean, clearly he's trying to strong arm Ukraine into agreeing on what Russia wants, and the Europeans are obviously in the middle of that as well. We'll come back and talk about that, Laurie. Thank you. Victor Yang, senior analyst at JLC Network Technology. Victor, let's just stick to geopolitics for now, and then I'll ask you more about the oil markets for China. But again, some fun, Japan and China having a sort of exchange of words. Japan crossing a red line, apparently, according to China's foreign minister, in terms of its maneuvering around Taiwan. What is the point of view from China there? Obviously, it's negative, but what do you think this really means? Is it being taken in any way more seriously than it should be?
Yeah, and this time is more than words now for China. As we know, in the past, China just protested basically vocally, but now it has taken more actions, such as warning against traveling to Japan. And as far as I know, over 500,000 people had canceled their travel to Japan, and has suspended the import of Japanese seafood again. And we can expect more actions to be taken against Japan, since we do not see any cooling down yet for the time being. And
why, from your point of view,
yeah.
why do you think Japan, I mean, it has a new prime minister, why do you think it has appearing to show a stronger approach than previously? Is it just because the new prime minister is trying to make her mark, or what do you think? Or is the US supporting that? What would China's point of view be on that?
I think it's probably for their own political agenda, for their military expansion. Yeah, there's been some change in their military strategies, and they want to find an excuse to expand their military. Yeah, and for China, this is definitely the landline. So over the past few days, we have seen a lot of videos, I mean, from the government about preparing for war, saying, for instance, one video showing that if the war breaks out tonight, are you ready? And military exercises. So this kind of strong sentiments, not just among the public people, the ordinary people, but also in the military too. So it is kind of different from the past. In the past, it would be just among the public, the people. And this time, it's also about the government too.
Okay. Omar, just back to the oil markets, we have another bulletin headline today on gold edging a bit lower as the market weighs a chance of another Fed rate cut. You've long been a sort of the opinion that, yes, they're going to have to keep cutting rates. The speed of it is the only question, but that's the only choice that the US has from a debt point of view. Obviously, that usually means a weaker dollar. And here it's gold is edging lower because of that. But just give us your sort of take as we end the year on how aggressive you think those rate cuts need to be as we go into 2026, and what that means obviously for markets. Yeah,
I think they're going to have to be aggressive. I think all this stuff, AI is a bubble and all this kind of stuff is just to move the market lower. I mean, the thing to understand is not that AI is a bubble or not a bubble. I mean, it's basically the thing to understand is the entire US economy, the entire G7 economy is one gigantic bubble. And the only thing that they can do is keep basically making it bigger and bigger and bigger. They don't produce. You can look at the economies of Germany, the EU are absolutely devastated. You can look at the UK down the toilet. And what's the plan? Borrow more and spend more. So basically, interest rates are coming down simply because the US cannot afford to borrow with interest rates where they are. So they're going to cut aggressively. The other thing to understand also, I think, on the geopolitical front I mean, why are people going into gold and not holding the US dollar? Is that the US geopolitically is cooked. How do we know? People talk about negotiation. You can't negotiate with the US. If you still think that US, you can have a negotiation with the US, I'm sorry. The Iran, when they negotiated, they bombed them and killed them. Same with Hamas. Same with the Venezuelans. So, I mean, they don't, even if they negotiate, look at Russia, the Minsk agreements, even if they agree and they sign whatever, they don't live up to them. Look at the GCPOA. Trump basically says, approved in the UN or whatever the vote was, yes, guaranteed by the UN, just walk away. So the idea that somehow we're going to have talks and negotiations, that's all done. So I think basically as you go forwards, you're going to see people move out of the dollar more and more, and basically, and the euro and Western economies. And you've seen this idea that, tariffs are going to do this, this, this. When Trump met Xi, he was reduced to toast.
Yeah.
It's very simple. They have the rare earths. The US cannot do it. Besant is saying we're going to do it in 1 or 2 years. Geez. I mean, China's took 40 years to do it. You're telling me that the US, so all this basically is smoke and mirrors. So when people tell you, gold isn't going to go higher, the S&P isn't going to go higher, oil isn't going to go higher, oil equity house prices aren't going to go higher. It's all going to go higher. Why? Because it needs to. We've been on this thing since the end of World War II. Higher, more debt, more spending.
Never ending.
1971, they came off the gold standard. It's backed by nothing. So they keep having to print more and more and more. COVID, 2008, just more and more and more. So
Okay.
that's my view.
All right. Thanks, Omar. Laurie, I mean, US and European credibility, I mean, both are sort of under scrutiny, aren't they, for different reasons? But let's just get your, we touched on obviously the Russia-Ukraine talks. I mean, again, I don't want to get bogged down because maybe it's just another round of peace talks that go nowhere. But from the European, I mean, you're based in Europe, from the European perspective, the headlines this weekend going into the talks were like, they don't even know what the Trump position is because, Rubio was saying one thing and then whatever, the usual mess. But what can Europe do? I mean, what kind of bargaining position are they in on Ukraine's behalf? And how much of a worry is it for them, obviously, if Trump and Russia get their way? I mean, that sets a very dangerous precedent.
Definitely the EU leadership, like being like EU, the European Union leadership, or even like member state, they were very clear that there is no deal without a euro, and it is not Russia and the US getting into a deal or imposing a plan without the EU. And they were very clear on their leadership, saying that we want a just and fair peace. And therefore, what they consider today on the table, especially on the territories, they say that there is no way to take away territories by force. And they are talking about like the army, the size of the Ukrainian army. They're saying that is not acceptable as well. And they are talking about definitely there is no deal without the EU, as we said, and the right of Ukraine to choose if they want to be part of the EU or any other part of any other institution in the EU. So very clear that these are like the issues that they want to deal with. They're okay, or most probably with the other points, part of the 28 points, but they do have a problem with these three. And I think that is good, at least if we know where the disagreements are, then they can have more focused negotiations. The only way for them is like, and it was very clear from Ukraine's position saying that we will enter into negotiations. So it wasn't completely refusing it and saying that this is not a starter, this is a starter. So there is a plan, at least now 28-point plan, and they would go into negotiations with the Americans. So definitely it will be some kind of give and take. But on what? On these 3 points, that's to be seen. Definitely, the EU has been really under pressure for different issues. And now today, for instance, where I'm sitting in Belgium, we have a 3-day demonstrations on the streets and strikes. So my son couldn't take the public transportation. He
Yeah.
had to take Uber to go to school. You see. So there are like already law. So this is like in Brussels. Then you will have in other places people not happy, etc. So that would put pressure as well on EU. So maybe that they should think of seriously ending this war, because this is the war that is really, they're paying a lot for
Well,
this
it's
war.
draining. It's
Exactly.
draining their coffers, and even more so going forward. I mean,
Exactly. And they
something
need to
can't
pay
afford.
because at least they would say that if we stop the war and paying for only the Ukraine's safety and security and military, at least we can build our safety and security and military, which is required because of President Trump's position about like, I'm not going to be defending you for free. You have to do something for yourself. So because there's no much money and how much they can borrow, as Omar was saying, they cannot continue on borrowing left and right and center, I guess. So
Absolutely.
incentives on all sides, even like Russia with the latest attacks on their refineries, on their supply sources. I think like even for Russia, maybe now it's time to
Obviously,
end the
Putin would
war.
like to see the end, but we don't see him giving up what without getting really what he wants. I mean, why would he at this stage? But let's see where all that goes. Victor, back to China. Give us a sense. We're ending the year now, a month to go. The sense into 2026 for oil demand. What's the storage situation? The market's got a lot of support recent weeks from China, buying oil at these quite favorable prices. Can you give us a picture of what the stock inventory situation is there and whether China will continue to do that into the first quarter? Some people in the market saying that it won't.
Well, I don't expect China to continue building up its stockpiles like in the first few months of this year, because it's been doing so for quite a few months, and now some refiners also worry about issues with the United States. Yeah, so actually they had cut back on the purchase of Russian cargoes lately, and we are probably going to see a drop in the country's crude imports in the last 2 months.
Okay.
And when we look at the whole year, well, gasoline diesel demand is declining, but the country's crude runs are not declining yet, basically stable yet. And the major reason for this is because of refineries upgrade projects. They are switching from oil to chemicals, and a few of them have brought their units online this year. And with these projects online, they can manage to cut the production of gasoline and diesel very significantly when reducing chemical productions. And Sinopec has even come out with a new technology, not very new, just a few years, which is called RTC, residue chemicals, which can reduce diesel production to zero. And in Zhejiang Refinery, which is a very big one by Sinopec, 800, close to 800 KBD. And it has 2 RTC units, which came online this year. These 2 units, together with downstream units, they can reduce diesel production to zero. So this can help to bolster the crude runs. And we expect such projects to continue bolstering the country's crude runs next year too.
Okay, and how much of that support for crude runs and refined products is coming from, China exporting to the region, if you like, as well, not just for its domestic consumption? How is the demand outlook looking there in terms of neighboring countries who take Chinese products?
Well, when we look at oil product export for the last 2 months of the year, we expect a drop because of the quota constraint. Now, state-owned refiners and a private one do not have much quotas left for the last 2 months of the year. So we will see.
And when will the new quotas get released for next year?
Well, for oil products, we are not expecting them until the end of December. So it will be used in, early January. so late this year, but it's not for this year. One is released in late December, is for next year.
Yeah.
So we are not going to have more quotas for this year. Some refiners can actually convert their quota on dirty fuel, I mean low sulfur fuel oil, to clean products. They have done so twice this year, and we do not rule out the ability of them converting another batch of quotas, some more quotas from dirty products to clean products. But the volumes will not be high, and we're still looking at a volume below the monthly average. Yes.
Okay. Thanks, Victor. There's also a question about the Russian peace, Russian-Ukraine likelihood of a peace agreement, impact on oil markets. I mean, the market reacting a little bit already when you get more positive and negative headlines. But what will it be? Bullish, bearish, or have little impact at this stage of the war, 3-4 years on? Laurie, we have a couple of bulletin news items on our headlines on the bulletin today. One is about Libya and the other one's about Iraq. I just wanted to get your sort of update on, I mean, Iraqi oil exports, this headline is about declines, but the Iraqi industry with the agreement with the Kurds has sort of had a more positive run the last few weeks. And Libya, US, European oil giants qualifying for first bidding in 18 years. How seriously should the market be taking? Of course, Iraq is a bigger contingent, but both of those separately in terms of added volumes.
Yeah, so Iraq, definitely their aim is always to add more volumes, because they need as much as they can to get money from the oil sector for their to support the economy of the country. Basically, we just heard as well, like I think there were some drones flying over one of the gas fields in Kurdistan, I think yesterday or this morning, I'm not sure. I read it, and they were like retaliation against that, because no one wants to see like some gas fields or anything attacked again. Good or bad, Iraq lives on oil revenues. And they now, I think, like for them, it's good news that they're getting back the international oil companies, and they're getting back the American companies, because they do need that sort of technologies, and they do need such capital and such companies. And then we've seen as well, like there were some tensions and some, if you want, some reason to worry when Lukoil and Rosneft were like really sanctioned, especially Lukoil, when they couldn't secure another company to buy their assets, etc. So that was a cause of concern, because they do have assets that are like run by Lukoil. So basically, it's like always good to watch. They want to increase, but do they have the capacities at the same time? So this is like a quick promotion for the work that we do at NRGI. We've produced like a new paper on methane emissions and the importance to reduce methane, and it is like economically good. So, and Iraq is one of the countries that we studied, and it says that you need to have like all these technologies on board to cut emissions. It will be good for your economy, and it will give you a lasting life for your oil and gas industry. And this is what Iraq is trying to do. So to improve and to bring in new technologies so that they could keep on becoming competitive, continue being competitive, since they're working a bit less on diversifying their economy away from oil. So they need to have a cleaner product, and something that the world needs, at the same time to have like the commitments for
the funding
for the
funding
climate
to
commitment.
even buy, but also the money to buy that technology is but certainly a much more stable situation in Iraq in recent years, of course, versus other countries in the region. Omar, back to you, just to touch a bit on gas prices, as we sort of we're in winter now. Europe sort of finally getting very cold, a freeze in the UK, etc. But I know you sometimes touch on the US, also Henry Hub prices. Any indications there that are surprising the market at all, or again, and is that trajectory also up and up and up from
No,
the lows?
it's the same, because the Europeans can make decisions. Like they can decide to buy all their energy from the US. They can decide to pay Trump 600 billion. They can decide to pay them 700 billion, blah, blah, blah. And also they can decide that, you know, if somebody invades Lebanon and takes territory, then that's okay. But if Russia takes territory by force in Ukraine, that's not okay. But if Israel takes territory by force in Syria, then we can't agree to that. But if we do it in Russia, then. So I think all this kind of stuff is just kind of, you know, you've had, I don't know if you remember, but do you remember when they were saying we're going to have 3 million barrels a day that are going to hit the market? A tsunami of supply is on the way. Where is it? Where is it? So now
Well,
what you're
OPEC's
hearing
holding
is,
the cards there at the moment,
no,
isn't it? I
no,
mean,
no. This supply was not going to come from OPEC. This supply was going to come from places like, I can't remember, Guinea or I can't remember,
Brazil and
Guyana,
Guyana.
somewhere. And now it's like, that's died a death. So now it's like, you know what? You got to look at Libya and Iraq, because Libya and Iraq, you know, they're going to
Got the
come and they're
oil.
going to do, but no oil. I mean, there was a story in the Financial Times, if you read it, it's like, you know, traders cannot trust this data because everybody's lying through their teeth. The US needs oil prices lower, right? People who are selling oil want oil prices higher, but they're also being pressured by the US to keep them down and all this kind of stuff.
Of
The
course.
market will find a way. The market is very cheap, and the direction of trend of this market, including LNG, is considerably higher. And if you don't solve this problem with Russia, then basically it's going to be even higher still, because Europe has sanctioned all the Russian gas. They want to be free of all Russian gas, including LNG, by 2027, because that's the decision they took. So I think that in terms of economies, the EU is done. Russia doesn't even talk to the EU anymore. You know, wanting a seat at the table, you can forget it, because, you know, what for? They don't make a decision. They follow what the US tells them to
Yeah, well, I
do.
mean, and everyone's making their own, I mean, the US didn't attend the G20 summit, you know, everyone's making their very independent decisions in this new world. Do we still have Victor, or has he just gone off my screen? I'm not sure if we've lost him. Do we have him? I wanted to go back to him to give us an update on the tariff negotiations with China. Victor, according to Victor.
He disappeared and then come in again. I think he's
Okay.
trying.
Well, hopefully, if he comes back, I just wanted to get an update. But Laurie, let me go to you on that in terms of the whole tariff story with Europe as well. If you can give us sort of your take on where Europe is at the end of the year, as you know, is Trump? I mean, everyone's very tired of this back and forth, aren't they? Of course, Europe's economy is already suffering. And what's Europe's strategy, do you think, going to be? What position are they in going forward on tariffs?
Look, for Europe, they feel like the Scotland deal that they made was like when they went with and von der Leyen met with President Trump, and they agreed on tariffs, and they agreed on LNG, energy, all of that stuff. They feel like that was like one step, and then to continue like doing. Looking at EU's problems, and now they have, of course, they have to agree on a budget for 2027 and on. They need to, as much as they can, they are like going into all these different, if you want, policies to bring back competitiveness. That's very important. Day and night,
I mean,
day and night, this is what they talk: how to bring competitiveness back, how to make the European companies more competitive, how to attract more money. So you have EU GCC strategic meetings like year-round, trying to convince the EU that investing in trying to convince GCC that investing in EU is a good idea. So I'm sure like when they heard MBS investing 1 trillion in the US, they were like, why there and not us? And what can we do? So I think this is what they're trying to do, like have all these strategic deals with the Africa, trying on all these interesting stuff like minerals, trying to build partnerships so that it is a win-win partnership, so that at least the competitive, like the EU companies are competitive and they can compete with this new world when we see that
Yeah.
the big competition
luck to
between
them.
China and US is the main
China and the
competition.
US hold the cards. Absolutely.
Exactly. And the rest
Victor,
is just like
Thanks, Laurie. Victor, just to wrap up for us, give us your, now that we have you back, which is great, just give us your take as the year ended on the tariff negotiations between the US and China. Is China hopeful that next year we'll have less back and forth on this? It seems to have had the upper hand, really, at the end of the day so far. How much more patience does China have?
Well, we see both China and the United States try to decouple from each other, but they cannot do so yet for the time being. But we expect the cooperation to drop gradually between the two countries, unless something dramatic happens in the future. Well, so basically China is now finding more alternatives, such as for imports and for export. Yeah.
Okay, so looking for alternatives continuously, which seems to be the right strategy. Sorry about that, Victor. The connection isn't great. There's our pretty evenly spread result. Obviously, we'll see where those talks go. Thanks so much, Victor and Laurie and Omar, for joining us this morning. Get well soon, Omar, and we'll have a great remainder of the week. All the best. Thank you.
Thank you. Yeah, thank you. Sorry
Bye-bye.
for the connection. Yes.
Yes, no problem. Hopefully better next time. Thank you.
Hello.